Welcome to the Big O Money Show. That's who we are. We're the Big O
Yes.
Money Show. Yeah. Premier Advisory Group here. Got Tony Shore co-host. Thanks everybody so much for tuning in. We have a couple other co-hosts, but I'll call them special guests or co-hosts or not so special guests. I don't know what they are. We got Bill Kaiser there to our left, and we got Andrew Galvin sitting there, rocking and rolling, holding down the fort.
Great.
Got some business going on up in Iowa right now, so I'm remote, but we got a lot of very important things to talk about. Markets are all over the place, and so we definitely want to talk about that and where we anticipate or not anticipate necessarily, but potentially could see things going, just based on statistics and based on conflict and all of that kind of fun stuff. And then we're here. I mean, it's Christmas time, and yes, you are listening in April, by the way. And I just turned actually 46. I was almost 47. It feels like 90, but 46 on Friday. So I'm a year closer to Kaiser. Finally, I'm trying to catch up, but it seems like every year he passes me again. So
I'm always trying to stay ahead of you, though, Bill.
Well, happy birthday, Bill. We're all here to celebrate. That's why we all showed up today.
Yeah, I bet you did. Yeah.
Yeah.
So what I see though, and what we're going to be talking about. So again, welcome, guys. How are you guys doing this morning?
Good. Yeah.
Yeah.
Right here. Yep. Great morning here. Awesome.
Great. Yeah.
Here.
I don't think I've ever been better, Bill.
So, Iowa, why am I in Iowa? I mean, my dad grew up in Iowa, actually, born and raised about 65 miles outside of Omaha. I'm outside of like West Omaha, 144th and Pacific, 65 miles away from there, roughly. And I mentioned 144th and Pacific because that was the neighborhood I was mainly raised in, Montclair, right here in Omaha. And so my folks met and got married in like 1977 in that neighborhood. But my dad's from Early, Iowa, a small farm. They had a quarter section of corn and soybeans, which later on in life, not just several years ago, was turned into alfalfa for a few years.
Oh, wow.
And then they rotated back to corn and soybeans. So, and so that's kind of neat. So yeah, I've spent a lot of time up in Iowa. We do have a lot of clients in Iowa. I think it's a great state. Financially, they're extremely well ran. I don't know how many people really know that, but they operate, their budgets, they're in surpluses. And to the point where they have a really good, even the county by county, they have members that sit on these county boards it's like the tax board, and it's made of taxpayers, not city employees, not county employees. And they get to decide or come up with a strategy to disperse these funds in some way because they run a surplus. So how can we make it better? And a lot of times it's reducing levies as prices go up, or there's also been a give back at one point. And they've actually called the state, this is many years ago, I can't remember exactly when, not too many years ago, but where the state of Iowa said, hey, they put it up for vote. We have X amount of dollars in surplus. We can either cut a check back to everybody of their share or whatever, or we could put it into the schools or the roads or the somethings, right? And so I believe it was set to give back into the community at some point to build whatever, a park, who knows, I don't know. But that's pretty neat. So that's kind of fun to know. Governments should do that. They need to be fiscally responsible. We're sitting at $40 trillion in national debt in the United States. I mean, $40 trillion freaking dollars. And it's like, when is it going to start being just another trill a day?
Yeah, that's real money, even to you, Bill Kaiser. That's real money.
I was fully expecting that, actually, 100%. So that's, I just kind of got off on a little tangent there and talked about Iowa just because I'm up here. But we do have volatile markets right now. And you guys are all seeing them firsthand. Andrew and Bill Kaiser, I know Tony, obviously you are too. And we've bounced back. We took a nice dip. It wasn't astronomical dip or anything. Sky wasn't falling. And remember, there's only really been 3 years in history where the markets have dipped over 40%, I believe. Right. And so there's a lot of data a massive data set. Really, 1926. We're in the 100th year of the S&P 500 this year. So we have this 100-year data set of companies and how they've done during a lot of crazy times, from Great Depressions to our financial crisis, the dot-com bust, trade towers being hit. I mean, the list goes on and on, right? The pandemic that shut down the entire world. It's in some parts for years, in some places haven't even recovered, right? Yeah. And so we have this, and the data shows 70+% up every single year. I think it's 73%. 73% of all years since 1926 have been positive. I mean, geez.
Yeah.
You take those odds to Vegas all day long and just go all in. I would.
It's resilient. Yeah, the market's resilient. Yeah. American companies, even during the war and oil prices, people are honestly surprised at how resilient the market's been. I mean, we just this past week hit another record high, and the S&P hit a record high. I'm like, wait, a record high right now? It doesn't seem feasible.
Yeah, and I believe a lot's geared towards politics. Go ahead, Kaiser.
Yeah, no, I mean, if you even look at the bogeyman that we've been taught for years about, if our oil is disrupted in the Strait of Hormuz, and in some ways that has all kind of been taken off the chessboard, as well. I think we're having a lot of the oil, being picked up here in the United States and Texas and the Gulf of Mexico, as well. And you're seeing a lot of, obviously, I think I don't know. I think it's interesting too, because I thought, if we're going into a war, we're going to have, oil go way up, and has it happened?
I'm paying $5.50 for diesel, anywhere from high $4s to mid $5s. I can tell you that. So yeah, it's high. I put $173 in my truck yesterday. So yeah, it is high. There's 90%. It's the traffic in the strait is reduced by 90% right now. There's 10% of traffic, normal tanker traffic, that's getting through the strait. And 80% of Iran's oil, all that oil, that's 80% of Iran's economy.
Yeah.
You know what I mean?
It's true, but it's come down a little bit. Oil has, but it's going up. It's bouncing up and down. Diesel's the worst. I mean, yeah,
because it's a byproduct. There's a ripping everybody off. That's a good, hardworking man machine. That's what I am.
That's what I am. A man machine. That's what I am.
I
love
machine
that.
of all mans. I don't know.
Well, yeah.
But but really, right? So there is, and so we deal with that conflict. But we need that. We need to be able to act on global resources.
Sure.
I mean, yeah. We want to? Oh, sure. It'd be a big, wonderful pipe dream that if we could drill everything right here and only have stuff from America, from the United States, and that would supply all of us, and we'd never have to worry about all. That's not reality.
No.
Maybe that sounds wonderful. Everything's made here. All of our oil is from here. And then we just put a big wall around the whole entire country and we're all good. We don't want anybody's stuff from anywhere. BS.
Yeah.
All of our families, people need to figure this crap out, is all I got to say.
The global economy.
Yeah. And the Holy War, this hasn't been a war for 37 years or whatever they're saying. This hasn't been a war this has been a 1,000-year war. This is a holy war that's going on. This is nothing new. That's not going to change. Those beliefs aren't going to change. Yeah, we get one guy out of power, they're going to put another guy in. We see that. And they're okay to die. They're fine to die.
Yeah.
They're ready to die. That's the oath that's what they've accepted in their religion.
Yeah.
They're ready to die in their culture.
Yeah.
So they put a new guy in. He's propped up. He's probably pumped, man. He's on, what do they give people? Like ecstasy? I don't think they give it to you. You take it or something. I don't take it, but that'd be crazy. But he's like ecstasied out right now or something. He's going wild. He gets into the spot, knows that his head's going to get blown off by a drone missile in a day, and he's all good. Yeah, I'm good with that.
Nobody wants to be the leader over there because they're going to get taken out.
I think they do because they're going to have all their wives.
Yeah, in that religion, some of them do, and it's crazy. But you're right.
Sure.
I mean,
well, what's the suicide bombers? It's no different.
Yeah, it has.
They're ready to go.
It's been a problem for a long time. But back here with the financial aspect of it, it is surprising. It surprises me still how resilient the markets are, honestly.
True. Yeah. Because good corporate profits and people are making money and design is good and chips are being made and all kinds of the fab building, Elon's new fab building down in Austin or wherever it is. I think it's down in Austin area. Yep. I mean, with the biggest, a $35 billion project.
Yeah.
Well, I mean, and if oil's being disrupted, we got great people who are gonna find the oil somewhere else.
We're gonna find it somewhere else. That's right. But it's like so we decimate them, and I think the message right now is being sent to say, hey, you can't send missiles over to Israel. Okay. Right. But I think there's somebody once told me there's three sides to every story: his, hers, and the truth. Right. Yep. And I think we can say that about a lot of things, including this conflict. Right. And as everybody knows me, I'm conservative. I am pro-America, big time, no doubt about all that. But I also do fully 100% believe that we have to act in a global capacity. And that is not going to change. Whether or not people think it, they can change it. If you want to change it, go off your grid and do your thing. I don't care. No one else does either. But as a world of 330 or 40 million people, not world, United States of America, 330 million people, we're just a little freaking drop in the bucket. The world needs people to rely on everybody from the intellect, the natural resources. That's what I truly believe. And we're going to have differences of religion and differences of opinion and differences of politics. Do you all really want it the same way? Do you really want everybody to think the same way? That'd be scary. Can you imagine a whole bunch of Bill Kaisers running around?
Oh, no, we don't want that.
Oh my gosh! What are you trying to do to us?
No,
or the Galvinator. Can you imagine? Oh.
The Galvinator. Yes. The AG himself, the Galvinator, Andrew Galvin.
The most self-disciplined we have in our office. I would say besides like Julie Mueller.
Yeah, Julie definitely takes that.
The
Julie
CPA takes the
great.
Yeah.
CPA takes the cake. Yeah.
Julie and Andrew are great. I got news for you, Bill. Kaiser and I aren't taking the social media off our phones. We're not.
Yeah, Kaiser. I know that for a fact. Yeah.
Kaiser isn't going to give up Minesweeper or Tetris anytime soon.
Minesweeper, yeah.
And Jake and Jake is Jake, but Jake loves the library. That's all we know. Oh. So he's a hell of a reader. Is all. It's it. So let's talk about the markets and what markets are doing.
Reader, mostly romance novels, but yeah, Jake's an avid reader.
So we're up 18 and a half. From last year or so at this time, 18% roughly. I think we're running right now on markets on positive. We're back to even or positive on markets for the year, S&P at least. Dow side, G50, our dividend portfolio, tried and true. What a freaking beauty. What a beauty.
Yep. Yeah.
Say it again, Andrew?
2.5 to 3% up. Plus dividend yield this year.
I mean, unbelievable, right? And so talk about weathering the storm. We've talked about it. Yeah. Is it the sexiest portfolio out there? No, it's 50 boring stocks that you own under your kitchen sink. That's what you spray your counters with to wipe them off and stuff, right? And your glass. And it's the detergent that you put in your washing machine. But we've been using those for a long time, haven't we? And having every single one of those stocks maintained its dividend yield and increased their dividend yield. And there's 50 of them that have done this in the COVID years. We, I think, had a drop to 47 because we couldn't find 50 that could actually do that. We didn't want to own 50. That's wild. of all the dividend stocks out there. So we're looking for blue chip companies that grow their dividend every year, and it's a healthy dividend. They maintain it. I mean, wow, that's pretty cool. And if they have a history of not doing that, they're just not there. It's a weed out question. It's a knockout. That's pretty cool, right? So they've done pretty good. In S&P, we love our S&P. I mean, everybody, there's internationals, there's all kinds of the world of investing, right? The crypto, the digital discoveries world, the whole 9 yards. The bond market, heck, after fees, we were seeing the bond market do 5.5% or so last year or something like that. Again, and this is not a prediction or a sales pitch of how markets are going to do or how the bond portfolio is going to do next year or anything at all. Okay. My point is that things have been really good. So when's the next shoe going to drop? So we bounced back. Remember the bounces that we've talked about on the show? And then all of a sudden it's like we have a little scare and it comes back and everybody's back high again. And it's like, great, we'll chase the return and invest everything in NVIDIA, everything that we have. Yep. And then all of a sudden it drops big time. How many times have we seen that in history? Enough.
Yep.
So are you at the point? So if you're sitting there and you're working, you got another 20 years or even 10 years left, you'd probably be a little bit heavier on the risk side. Again, everybody is totally different. So this is not a one size fits all type of situation, but just in general, as you get older, what do we have to do as we get older, guys?
You got to take some risk off the table.
We have to lighten it up. That's all. That's a normal thing. And why do we have to lighten it up? Because we don't have the time anymore. Remember Willie C., my dad, Will, I don't even know his name. I call him Dad or Willie C., Bill Sr. There we go.
Yeah, that's great. Yeah.
Yeah, whatever.
Wait, your name is Bill and you forgot your dad's name, which is Bill also?
Well, because I don't call him Bill.
I know you don't.
So, and honestly, so The Office, we're not a junior and a senior, by the way, because we have different middle names.
I know.
But they do call us Bill Jr., Bill Sr. In fact, I've even seen stuff come back from the IRS or something, and it says, William J. Altman Jr. No, that's not right. But anyway, so it's kind of funny. But I do know him much better by Willie Sr., and then family-wise will know me by Willie Jr.
So, wow. Okay.
Yeah, so, just FYI. But so sidebar. Anyway,
our poor listeners right now.
Back to that. I know, right? It's crazy. I like this little setup though. Actually,
yeah, it's kind of fun.
Nice.
Back. Talking about markets. So yeah, lots of great upside for a long time that we've seen. It's really market's been fantastic. Would have over the last 5 years, 4 have been up, 1 was down.
Yeah,
something in that, I believe.
2022 was the last time we saw a down year.
And so that's pretty good. And then so we got 23, 24, 25, 26 is now positive. We start thinking about the math again, and we're like, okay, 73%. Okay, we're kind of there. Are we going to see the other shoe drop? Are we starting to get away from that 73% if we look over the last 10 years? Or are we a little chunkier than the 73? Yeah, right? So it's kind of are we expecting something else? Potentially. Am I worried about it? Absolutely not. I'm the eternal optimist. I'm not worried about it, right? I keep going. Everybody knows. You all know. We just keep going. I do not pull back. I always stay in the game. Always. That's me. That doesn't have to be anybody else, by the way. That's not, my mom's not that. Okay, so that's not a one size fits all. But so yes, I do think things are going to be volatile. And I think we have elections. What do we have coming up here? All of a sudden something happens and things are real volatile, it gets closer to midterms, all of a sudden market starts popping up a little bit and a few more boats get through the old strait with some oil on it, and then who wants to win the elections this year? Well, everybody, right? But who's in power? The Republicans, right? So we stack the deck right before midterms, markets pop if they can time it right, and then Republicans get elected, secure everything, and then poop. We've seen that story before. This isn't a new one. It's been written. It's almost like a playbook, right? Are we going to run? Is that play going to get ran again? I don't know. So we'll see. It could backfire too. We've also seen stuff backfire like that. However, we've seen a lot of up. And so is the other shoe going to drop? There's a lot of great opportunities. Andrew, I see on a regular basis, things come and due from buffered index notes.
Yep. Yeah.
You know, a buffered index comes due and it's like, you know, they had 18-month structured note, which is based off, this particular series was based off the S&P 500 at 100% principal protection. You had, I saw one this morning that's coming due. 12.5%, I think, was the upside. 100% principal protection is from Barclays, a massive financial institution, global Barclays, right? Your risk is that Barclays goes broke. That's your risk. So if Barclays doesn't go broke, you're good. If the market was down over those 18 months, you would have 0 losses, 100% principal protection. If the market was up over those 18 months, you could make up to 12.5%. At the end of the 18 months, it just gets turned into cash and put back into money market until it gets reinvested.
Yep.
Pretty sweet deal. Yep. Daily liquid. You can get your money out anytime you want. You can't take a little systematic distribution like $100 out or whatever. You got to take the whole thing. And that's okay, but you can still get out.
Bill, with that, you know, if the market does better, well, guess what? We cap out, we liquidate early, and then we can move back into the broader market if we want to capture more upside. We have.
Thank you. Yeah, let's just say you're 12 months. Let's say you're 12 months in, and the market's up 12. Yeah, let's just say it's up 12% in 12 months, and you have an 18-month term. We can liquidate early. We pay a $250 fee. Wow. $250 fee, flat fee, liquidate early. Bill Kaiser pays for it. We're all good. Right. What's up, Kaiser?
Yeah, but who would those structured notes be perfect for?
Bill Kaiser?
Of course.
Yeah,
but,
Bill Kaiser.
What's the profile of the person who'd want to use something?
Yeah, a piece of safe. The profile would be someone who is looking for some safety within their portfolio. That's the profile. That does not have to take systematic withdrawals out of it for the term that it's set for, whether it's 12 months, 18, or 24. So someone that's looking for some piece of safety within their portfolio. That's the profile.
Yeah.
That could be me. It could be the 90-year-old. It could be Jake, the 24-year-old. It could be AG over there. Absolutely.
Depending on the rest of your financial picture and your goals, your time horizon, like you've said, everybody's situation is different, but I love that because it's a great alternative to other principal protected options. I mean, you know, bonds, you can still lose money, as we found, you know, there's a 3 to 5 year period where bonds were terrible. And there are other things where you can get principal protection. But this is really one of the better ones for most people, and it's still a portfolio. I think that's fantastic.
Oh, yeah. I mean, absolutely. And I know we only have like a minute left or so, but here's another option for safety pieces. There's a company out there that has a 5-year fixed indexed annuity. There is no fee on it. So it's 0 fee, no load. Okay. There's no commission you're paying to go into it. And there's no annual fee. There's no riders. There's no funny business. It's based off the S&P 500, 100% principal protection, 9% upfront bonus. 100 grand goes in, you start with 109 from day one. It's protected. No one can take that away unless you get out before the 5-year period.
Sure.
After the first year, you can start taking free withdrawals though, which is great. But so you start with your 9% bonus, and then every year you can make up to 6.5% per year with 0 downside risk. You know what I call that? A bond alternative.
Yeah.
I don't know.
A much better solution than a CD at a bank or, you know, things like that. You've got to weigh what mathematically is going to work for you. And if you have money that you're not going to need to touch for 5 years, wow. I mean, some of these things are no brainers, but we do have to wrap it up. So before we go, if Bill Kaiser could give our listeners his personal cell to set up that no charge, no obligation consultation. Actually, I'll let one of you guys, Andrew, why don't you tell our listeners and viewers out there how they can set up a consultation? There's no charge, no obligation to get a financial plan in place.
Yeah. Give us a call, 402-557-6730. Talk to Justine, get on our schedule. We'd love to help you out.
All right, guys, Bill coming to us live from Iowa. I love that. I absolutely love that out there in the cornfields. And Bill Kaiser and Andrew Galvin joining us today. That does it for today's episode of the Big O Money Show.